Most people believe that you need hundreds, if not thousands, of dollars to start investing in the stock market. They look at the price of a single share of Amazon or Google over $1, 0 cents, and they think, I'll never be able to afford that. So they do nothing. They wait. They tell themselves, I'll start when I have more money. But in 2026, that excuse is dead. Completely and utterly dead. Because today you can start investing with just $10. Not $10,000, not $1,000, $10. You can buy a piece of Apple, a piece of the S&P 500, a piece of the entire global stock market, all with the click of a button with zero fees and no prior experience. The barriers that kept regular people out of the market for generations have been torn down. And if you stay until the end of this video, I'm going to show you exactly how to do it, step by step, dollar by dollar, starting today. 20 years ago, if you wanted to buy a share of Berkshire Hathaway, you needed $80,000. If you wanted to invest in a diversified portfolio, you needed a broker, a minimum deposit, and you paid a commission on every single trade. The system was built for the wealthy. But in 2026, the system has flipped. Today, you can buy a fraction of a share of any stock or ETF for as little as $1. The fees have dropped to zero, and the apps you need are free. This is the golden age of micro-investing, and the only thing standing between you and your first $10 investment is you. Skip, so what exactly are fractional shares? It's simple. Instead of buying a whole share of a stock, you buy a slice of it. If Apple costs $200 per share, you can buy $10 worth of Apple. That's 5% of one share. You still own a piece of the company. You still benefit when the stock goes up. You still receive dividends, just scaled down to your ownership percentage. And here's the magic. Because you're not buying whole shares, you can diversify your portfolio instantly. For $10, you can buy a slice of 100 different companies through a single low-cost index fund. That's the same diversification that used to cost $10,000. Skip, let me give you a real story. A few years ago, a viewer named Maria was working as a cashier, earning $28,000 a year. She thought investing was for rich people. She had $20 in her wallet, and she thought, what's the point? I showed her a fractional shares app. She invested that $20 in a low-cost S&P 500 ETF. She started adding $10 a week from her paycheck, less than 1 hour of her wages. That was 3 years ago. Today, her account is worth over $5,900. She has a stake in over 500 companies. She's building wealth while her coworkers are still spending that same $10 on lottery tickets. Maria's not special. She just started. Now let's talk about the second revolution, zero commission trading. In 2026, the majority of online brokers offer completely free trades on stocks and ETFs. Robinhood pioneered it, and now Fidelity, Schwab, Webull, and eToro have all followed. You can buy and sell as much as you want without paying a dime in commission. There are no hidden account fees. The only cost is the tiny expense ratio baked into the ETF itself, typically 0.3% to 0.1% per year. That's $3 to $10 per year on a $10,000 portfolio. It's effectively free. Skip Fidelity, which Investopedia named the best overall broker for 2026, offers fractional shares starting at just $1 with zero commissions, a beginner-friendly interface, and 24/7 customer support. Robinhood gives you a slick mobile app, fractional shares, and even a 1% IRA match. Webull combines powerful trading tools with the ability to trade fractional shares for as little as $5. And eToro lets you start with just $10 and offers social trading, so you can see what other successful investors are buying. The barriers are gone. The only thing left is your own hesitation. Skip. So how do you actually start with $10? Let me walk you through the exact steps. Step 1. Download an investing app that offers fractional shares and zero commissions. In the US, I recommend Fidelity, Robinhood, or SoFi. SoFi has a $5 minimum, Robinhood starts at $1, and Fidelity starts at $1. All of them offer fractional shares and commission-free trading. Skip. Step 2. Open an account. This takes less than 5 minutes. You'll need your social security number, a driver's license or state ID, and a bank account. No minimum deposit, no fees. You'll fill out a simple questionnaire about your risk tolerance. Just answer honestly. The app will guide you through the rest. Skip Step 3. Link your bank account. This is how you'll transfer money into your investment account. Most apps use a secure service called Plaid. It's the same technology Venmo and PayPal use. You'll be able to transfer money instantly or within 1 to 2 business days. Step 4. Deposit your first $10. Yes, just $10. If you're nervous, start with $5. The amount doesn't matter, the habit matters. Once that's $10 hits your account, you're officially an investor. Step 5. Decide what to buy. Here's where most beginners get stuck. Analysis paralysis. They spend weeks researching stocks, getting overwhelmed, and never pulling the trigger. Don't do that. For your first investment, buy a low-cost total market ETF. My top recommendation is VTI, the Vanguard Total Stock Market ETF. It owns over 4,000 US companies, from Apple and Microsoft down to tiny regional banks. It's instantly diversified. The expense ratio is just 0.03%, and you can buy a fraction of 1 share for as little as $1. For $10, you'll own a tiny slice of the entire American economy. Step 6. Place your order. In your app, search for the ticker symbol VTI. Tap Buy. Enter the dollar amount. 10. Choose Market Order, which buys at the current price. Confirm. That's it. In a few seconds, you'll see your new position. $10 worth of VTI. You're now a shareholder. Welcome to the club. Skip. Now, here's the most important step of all. Set up automatic recurring investments. This is what turns a one-time experiment into a lifelong wealth-building habit. In your app, find the automatic investing or recurring transfer section. Set up a weekly or monthly transfer, $5, $20, whatever you can afford. Link it to the same ETF. Now your money will be invested automatically without you having to think about it. This is the secret sauce. You won't miss the money because you never see it. Skip. Let me show you the math. If you invest just $10 a week, that's $520 a year in a low-cost ETF that earns a 7% average annual return. In 30 years, you'll have over $52,000. You would have contributed $15,600. The rest is compound interest. That's not a small number. That's a down payment on a house. That's a year of college tuition. That's a life-changing sum of money built from just a few cups of coffee a week. Skip. And if you can do $20 a week, $1,040 a year, in 30 years you'll have over $104,000. In 40 years, over $240,000. That's a retirement account. That's freedom. And it all starts with a single $10 investment. Skip. Now you might be thinking, what about the fees? Won't the fees eat up my small balance? It's a valid concern. If you use a micro-investing app like Acorns, you'll pay a flat monthly fee of $3 to $12. On a $100 balance, a $3 fee is an effective 36% annual expense ratio. That's a deal breaker. But if you use a mainstream brokerage like Fidelity or Robinhood, there are no monthly fees. The only cost is the ETF's expense ratio, which at 0.03% is about zeros. 0.0003 per year on your $10 investment. It's literally pennies. So skip the micro-investing apps with monthly fees. Use a real brokerage. Skip. Let me talk about Acorns for a moment, because it's popular but flawed. Acorns charges $3 to $12 per month, regardless of your balance. On a small account, that fee is enormous relative to your assets. One study found that a $3 monthly fee on a $1,000 balance is an effective 3.6% annual fee, more than 10 times what you'd pay at a normal brokerage. So while Acorns is great for the roundup feature and the automated investing experience, it's only cost-effective once your balance exceeds a few $1,000s. For your first $10, use a zero-fee brokerage instead. Skip. What about robo-advisors like Wealthfront and Betterment? They charge an annual management fee of 0.25% of your assets with no monthly flat fees. On a $100 balance, that's $0.25 per year, cheaper than Acorns. They also offer fractional shares, automatic rebalancing, and tax loss harvesting. They're a great option for investors who want a hands-off approach. Fidelity even has a robo-advisor called Fidelity Go with zero management fees for balances under $25,000. That's free professional management for your entire starting portfolio. Skip. So what should you buy with that first $10? Let me give you 3 simple options, from simplest to most advanced. Skip option 1, VTI. The Vanguard Total Stock Market ETF. It holds over 4,000 US companies, low cost, highly diversified. Perfect for beginners. One and done. Skip option 2, VT. The Vanguard Total World Stock ETF. It holds nearly 10,000 companies across the entire globe, US, Europe, Asia, emerging markets. This is even more diversified than VTI. If you believe the US won't always be on top, VT is your answer. Option 3, a target date index fund. These are mutual funds that automatically adjust their stock, bond, allocation as you get closer to retirement. They're designed to be the only fund you'll ever need. For a young investor, a 2065 or 2070 target date fund is an excellent choice. Vanguard's VTTSX, for example, has a $1,000 minimum for the mutual fund version, but you can buy the ETF equivalent with any amount. Or you can use Fidelity's target date index funds, which have zero minimums. Skip. That's it. 3 options. Pick one. Don't overthink it. The perfect is the enemy of the good. The most important thing is to start. Skip. Now let me address our international viewers, because I know the tools vary by country. Skip. For our viewers in the UK, the landscape has improved dramatically. Trading 212 is consistently ranked as the top investing app, offering fractional shares, zero commissions, and a stocks and shares ISA. You can start with as little as £1. Robinhood UK recently launched a commission-free stocks and shares ISA with no platform fees, zero commissions, and a 2% cash bonus on eligible contributions. You can trade both whole and fractional shares within the ISA and open an account in minutes. The key is to use your annual ISA allowance, 0 for the 2026 tax year, so all your growth is tax-free. Even if you're only investing £10, put it in an ISA. Don't leave free tax savings on the table. Skip. For our viewers in Canada, Wealthsimple is the best option for beginners. It offers zero commissions on stocks and ETFs, fractional shares starting from $1, and a beautifully simple mobile app. You can open a TFSA, RRSP, or non-registered account. The TFSA is your first priority. All growth is tax-free, and the 2026 contribution limit is $7,000. TD Easy Trade is another excellent option, launched in March 2026, giving you access to fractional shares with no account minimums and no account fees, plus 100 commission-free trades per year. That's more than enough for a beginner. Skip. For our viewers in Australia, Rise is the pioneer of micro-investing. You can start with just $5, and the app automatically rounds up your everyday purchases and invests the spare change. Rise charges a flat monthly fee of $2.50 for balances under $1,500, which, as we discussed, can be expensive relative to your assets. For your first $10, you might be better off with ComSec Pocket, which lets you invest in themed ETFs with as little as $50. Or use eToro or Webull, which both offer fractional shares and low minimums. If you're investing small amounts, prioritize a brokerage with no monthly fees, and consider using a micro-investing app like Spaceship Voyager, which has no monthly fee for balances under $100. Skip. No matter where you live, the same principles apply. Find a brokerage with fractional shares, zero commissions, no monthly fees, and a low minimum investment. Open a tax-advantaged account first, Roth IRA in the US, IFSA in Canada, superannuation in Australia. Then buy a low-cost total market ETF with whatever money you can spare. Automate your contributions, and then do nothing. That's the whole strategy. Skip. Now, let me address the fear that's holding so many of you back. What if the market crashes the day after I invest? I hear this all the time. Here's the truth. The market will crash again. It always does. And when it does, your $10 investment might drop to $8. That's okay, because you're not investing for tomorrow. You're investing for 30 or 40 years from now. The market has always recovered from every crash. The only people who lose money are those who sell. So don't sell, don't even look at your account, just keep investing. Over decades, those small weekly contributions will turn into real wealth. Skip. Let me give you a concrete example. If you had started investing $10 a week in the S&P 500 in 2000, right before the dot-com crash, you would have watched your portfolio drop 50% in the first 2 years. That's terrifying. But if you had kept investing, by 2020, you would have turned that $10 a week into over $20,000. Your total contributions would have been about $10,400. The rest is profit. You would have made money despite starting at the worst possible time. That's the power of consistency. Skip. So what are you waiting for? The tools are in your hands. The barriers are gone. You don't need a finance degree. You don't need a rich uncle. You need $10 and 5 minutes. That's it. Skip. Here's your action plan for the next hour. Skip. First, download a brokerage app. If you're in the US, I recommend Fidelity or Robinhood. If you're in the UK, download Trading 212 or Robinhood UK. If you're in Canada, download Wealthsimple. If you're in Australia, download ComSec Pocket or Rise. Skip. Second, open an account. You'll need your ID and bank information. It takes 5 minutes. Skip. Third, link your bank account and deposit $10. If you're nervous, start with $5. Count doesn't matter. The act of starting matters. Skip. Fourth, buy your first ETF. Search for VTI US, VWRP UK, XEQT, Canaverton Australia. Buy as many dollars worth as you deposited. Skip. Fifth, set up automatic recurring investments. Even $5 a week. Make it automatic. You'll never miss the money. Sixth, delete the app from your phone. I'm serious. Don't check your balance every day. Don't watch the news. Just let the automatic investments run. Check back once a year. On your birthday, maybe. That's it. Skip. Seventh, comment below. I just bought my first $10 worth of VTI. I'll reply to the first 100 comments personally. Asterisk. Skip. If this video gave you the courage to start investing, hit the like button. It helps others who are stuck in the same cycle of fear. Subscribe and turn on notifications. In the next video, I'm going to show you how to handle the wealth gap with your spouse, how unequal incomes destroy relationships, and how to fix it. Asterisk. Skip. The journey to wealth does not start with a winning lottery ticket. It starts with a single, small, intentional step. Take that step today. Invest your first $10. Your future self is already thanking you. Skip. I'll see you in the next video.